All right. Welcome to TrendSpotter Live, everybody. My name is Mike, and today we are joined with James Foord for the HIMS earnings reaction. How's it going today, James? Thank you for joining.
Doing pretty well, Mike. All things considered, despite all the red on the screen. Thanks for having me on.
Yeah, no, of course. Great to have you on. And yeah, like you said, well, first can take a look real quickly at just the overall market with the SPY. As you can see, we're still trading, pretty much in a range here, but at the same time, pretty nasty day. If we open the 5-minute chart, you can see it's been pretty bloody all throughout the day. But let's go back to HIMS actually real quick because there's a few things wanted to show you guys here on the live stream regarding HIMS. For one, relative performance is literally at zero, which means it's underperforming 100% of the stocks in the S&P 500. So very, very weak. But at the same time, there is a decent technical level here, right around pretty much exactly we're trading right around 15 that HIMS is coming into as it's preparing to report earnings. So should be a very interesting earnings report. As you can see, the stock has literally not been able to catch a bid at all. But if you guys are out there in the chat, let us know how you guys are doing today. If you guys are trading HIMS, let us know. Give us your guys' trade ideas. We'd love to see what you guys are in personally. But yeah, James, something I was noticing here on the HIMS chart, I'm sure everyone has, but I have the revenue plotted on my chart here. You can see this white line here is actually the revenue growth of HIMS, and it's really been phenomenal, right? It's been going straight up and to the right. And just recently, of course, ever since late 2025, it has detached from that revenue growth, the price of the stock itself, and it has come down ever since. So, James, is there any breakdown of what you're seeing going into HIMS? I know you've done a few articles on this name. What kind of insight are you seeing on this name?
Yeah, HIMS is an interesting one. It was one of my big winners in 2025. I believe I started covering the stock, back in February or a little bit before that. But definitely very interesting. I mean, ultimately, HIMS, it's pretty much ridden on the back of that GLP-1 narrative.
Yeah.
Basically, what we've seen in the last few weeks is that's kind of started to break down, right? I mean, obviously, people are familiar with the story, right? I mean, HIMS, basically a telehealth platform offering that those compounded versions of the GLP-1s, which I mean, everyone's known for a while that there's a lot of scrutiny, like regulatory scrutiny. Can they sell them? Can they? It depends. Are they on the short list for products that are in a short supply, all that stuff? And it feels like that's really escalated in the last 2 weeks. I believe a couple of weeks ago they were sued by Novo, and they had to pull off some of their products. And now there's speculation that the DOJ is kind of getting involved potentially. Again, this kind of puts management in the crosshairs too, which obviously not a great look. And obviously, and like you said before, also the stock is very shorted at the moment. So obviously a lot of headline risk with HIMS, and I think that's kind of what we've been seeing. Let's see what happens after these earnings. Just full disclosure, I was long HIMS, and just like last week I said, we took some profits on the way up, and now I'm just kind of gonna wait and see. So I'm not holding any HIMS at the moment, but happy to buy back in, depending on what we see and what happens. I mean, it's a company that I like because let's face it, I think that compounded products are great. People should have access to cheap stuff, but that's not how the world works. I'm the pragmatic investor. Sometimes you need to look at things through the pragmatic lens, and let's face it, big pharma doesn't particularly agree with me.
Yeah, fair points. And yeah, you mentioned Novo, and we were talking a little bit before we started the live. And if you guys didn't see today, NVO, Novo Nordisk, is down pretty significantly on the day here. It's down, like 16%. So pretty interesting as we come into HIMS earnings that we see NVO breaking down above a pretty key support level there at 46, as you can see right there. It's really in a pretty crazy free fall. We can take a look at one of the other names, LLY on the chart. Yeah, I mean, As you can see, LOI is holding up there very strong, obviously compared to both HIMS and Novo Nordisk. They actually did report earnings not too long ago as well. It seems like it was actually pretty good. So that's another name that if you guys haven't seen, should be probably on your radar if you're investing in HIMS or interested in HIMS as well. But yeah, let's see what Sidekick has to say. Before this live start, I prompted this to TrendSpider Sidekick AI, so we can take a look at what AI has to say about it. Of course, we can see the expected numbers, EPS estimate at 3 cents, and $618 million in revenue are estimated, which is, compared to the previous quarter, 599 million and actually a 6-cent EPS. There's a few recent news articles that have dropped lately as well. Sometime last week, there's a major acquisition. HIMS is acquiring eucalyptus for up to over 1 billion, 1.15 billion. That could allow them, it says, to expand into Australia, Japan, some other non-US, countries. How's it going, everybody in the chat? For all you guys saying hi. And let's see here. But yeah, overall Sidekick is saying hold or avoid before earnings, saying the risk to reward is just not very favorable. But this is AI. Take everything it says, with a grain of salt sometimes. But that is what AI has to say about it. So we'll see how that holds up. It is saying the risk to reward is not very favorable, but if you draw our position tool right here, you can see, we're at a pretty good support level, I would say overall. Is there anything that particular that would make you want to get back in and buy this, James? I know you said you're pretty much out now, but
well, a couple of things, like you said, technical support is there. So, if we see momentum shift, that could definitely be interesting. Again, I'd kind of like to hear what management has to say, really, and see if see how convincing they are on the earnings call, and then basically also kind of look at what their plans are, especially relating to eucalyptus acquisition. I haven't really looked into it, but it's definitely interesting. I mean, HIMS at this point, I think they have made quite a few acquisitions, and I think that is the right move, kind of trying to expand a little bit between beyond just being a platform, which
right.
Ultimately, otherwise they're going to get caught up in this SaaS apocalypse too. Basically, otherwise.
Yeah, no, very true, very true. I'm sure everyone out there is aware of what we're talking about here, the SaaS apocalypse. Tons of software names being absolutely crushed lately. Microsoft, let's take a look at them. We got Snowflake being creamed, and then IBM today is absolutely getting destroyed as well. Just feel like every other day Claude releases something, causing some big name to get absolutely crushed. Like last week, it's a lot of these cybersecurity names like Okta here, just absolutely getting crushed by AI. So it's really interesting to see how AI is just taking a ton of market share away from some of these companies.
Yeah, it's just taking out everyone, really, and you can't really hide anywhere, because it seems like even the companies that should be doing well because of AI aren't doing that well. I mean, I will say some of the data center stocks are holding up okay. Like I mentioned before, I still have some Nebius, MBIS, which has done okay over the last, but again, these are kind of almost contradictory things, right? If AI is destroying everything, surely we need to, surely the data center stocks should be exploding,
Right.
But it's not quite happening. I mean, there's a lot of stuff. Let's face it. At the end of the day, the narrative, follows the price, right? Like people say, there's a lot of stuff going on. I mean, is it really AI? Could it be that Mr. President just puts 15% tariffs after the Supreme Court struck the tariffs down?
Yeah.
A lot of things going on, really.
Yeah. No, 100%. It's an interesting market, right? Because a lot of stocks are down, really big off their all-time highs, but yeah, we got SPY over here not really taking much of a hit because a lot of the market rotations and it's just very interesting. We can open the stock market map that I have here. You can see where the money is flowing into, sector wise. We got a lot of money coming into energy over the last 30 days. That is pretty much leading the last 30 days, actually. And then, utilities and consumer staples also have been doing pretty good. But I think let's take a look at XLP today. Yeah, XLP is actually doing really good today. So kind of a flight to safety, I guess. See the overall Dow Jones, but the Dow Jones is down. So really is a stock picker's market, isn't it?
Yeah, I mean, there's definitely a lot of pockets of bullishness out there. I think,
Yeah.
I mean, towards the beginning of the year, we saw the small caps were outperforming. We've seen industrials do well. Certain defense stocks, of course, commodities. Except for a big sell-off we had in maybe silver and gold to a lesser extent recently. But overall, doing very well. And like you say, it's a stock pickers market. Although it seems like the easiest thing would just be to sit and spy, because somehow, like you said, it seems like most stocks seem to be. I think I saw a chart where most stocks are below their 200 moving average, and somehow the S&P is just like 2-3% from its all-time highs.
Yeah.
No,
No,
challenging
absolutely.
for sure.
Yeah. Which is actually something we can use that's interesting that you say that. I'm going to use the AI market scanner here on TrendSpider real quick. I'm just going to say find stocks with, RP greater than, let's just do 90, because we're going to find basically the strongest stocks in the S&P 500 right now, which is a scan that I like to do quite a bit, just so we can see, if, SPY is holding up, like where there's got to be some stocks in there going up. So let's see what the strongest stocks are right now. So I just, relative performance over the 90, and then we'll search through the S&P and we get this list of stocks, actually quite a bit. Let's crank it up to 95 and see what happens here. So quite a bit of names. WDC pops up. A lot of these memory names had definitely been hanging in there pretty well. For you guys out there in the chat, some people are asking about the HIMS earnings call. That HIMS earnings call will start in about an hour. So yeah, we're going to be watching the live reaction, and then just analyzing what the numbers are, and then the earnings call is not starting until an hour, 5 p.m. Eastern. So yeah, be ready for that. We will. Sometimes I play the earnings call when it comes out, but I might just drop you guys the link if you guys are interested in that as well. But let's see what else we got in here. We got AMAT is popping up in here. AMAT has been doing pretty good as of late. GEV and FedEx, which is interesting. FedEx has actually been on a pretty nice tear lately. CAT, a lot of the basically industrial names, memory stock names like Western Digital have been doing pretty good. So that's pretty much.
And of course, SanDisk, which was spun off.
Yeah.
About 1,000%.
Yeah, SanDisk has been an amazing one.
No lack of opportunities out there. Newmont, of course, one of my favorite gold miners. Easily, very,
yeah,
just buying hard at this point. I think the miners looking good at this point. Gold doesn't even have to keep going higher. I mean, if gold can just hold the prices it's at right now, I mean, the miners still have some leeway, I think.
Yeah. If you look at the GDXJ, it's been trucking along. It's hanging in there pretty well. Gold and silver are up on the day as well. Gold just continues to rally today very, very nicely. So, and we got just about 4 minutes until the earnings come out. Yeah, for you guys asking out there, we will be covering the numbers as they drop in real time. So yeah, definitely stick around for that. Again, the earnings call itself doesn't start for an hour, but the numbers will drop 5 minutes after the market closes. So we got about 10 or 15 minutes, give or take, until the numbers drop, and we will be covering them in real time. So yes, absolutely. And if you guys haven't already, make sure you guys like this video and subscribe. Also, check out James Foord on X. He does, he's a top seeking alpha author. So he's out there providing some pretty nice insight. So definitely be sure to give him a follow as well.
Yep, you can also check out my Substack. Also pretty much do same content over there. So
excellent.
Whichever you prefer.
Yeah, absolutely. Yeah. Thank you again so much for coming on, James. Love having guests on. Glad you can make it. But we do have a few other names. It looks like everybody out there in the chats is here for HIMS, but there's a couple other names. We got a defense name, KTOS, which is a defense name. Again, been performing really, really nicely as a relative performance of 98, which means it's practically outperforming the entire market. We got BWXT. Again, very strong performer, 93.6 relative performance, and FANG, which is an energy company, Diamondback Energy.
Oh, yeah.
So, yeah, got a few different ones. But yeah, we'll definitely be focusing mostly on HIMS. Curious, Danny, you seem very excited for this. Do you have a lot of HIMS in your portfolio? Are you trading calls or what's going on? Yeah, just a few minutes to go here, though. Would be super fun to see a good bounce here on HIMS. It's the stock has been absolutely beat up. It's trading, yeah, crazy fall. Like, how much is this thing down from the top here? It's down 80%.
Yeah, that's
wild.
Pretty wild. And what's the short? The short interest is like what, in the 20s or something, I believe.
Yeah, it's up there somewhere. I don't know the exact number, but I know it is definitely a pretty shorted name. Absolutely. So, who knows? Maybe we'll get it. Maybe get a short squeeze. We'll see. But yeah,
it's a little too rich for my blood. Like I said, I'm neutral on HIMS right now. I don't think I could my heart could tolerate holding any options around this earnings.
Yeah, no, it is a pretty wild ride if you're trading earnings with options, especially long term. So Danny says he's a long-term investor, likely in shares, which is good. It does even scare me just to see how many people are trading earnings with options. It's based on IV Crush and all of that stuff. But somebody else is saying, I'm looking at HIMS, was planning on entry at 235 tomorrow, or maybe even now. I'm new to this. Any advice? Well, we can't give you guys any financial advice, but here's the bell, by the way. Let's get open to our 1 minute chart here and see what's going to happen with HIMS. Trading about
market's closed. We can stop losing money now. Well,
yes.
no, because we have after hours.
Yeah. Got our after hours change percent indicator here on the platform. If you guys are just tuning in, the market just closed and we are patiently awaiting the HIMS earnings numbers. They should drop in just a few minutes, about 5 to 10 minutes. We will get the numbers and we're going to cover them live, and we're going to see how the stock reacts to it on the chart, because price is really, fundamentals are great, of course, but your portfolio is going to move based on what the price does as well. So don't worry, Danny. The second these numbers come out, we'll get them for you. But I'm glad you guys are excited. Let me start a quick poll here on YouTube. I'm just going to start a poll. Does HIMS post a double beat? So if you guys are on YouTube, go ahead and vote yes or no. It's a simple question. Does HIMS post a double beat? EPS and revenue, that is the question. Let us know what you guys think, and we'll take a look at the results here. It's about 50-50 for now, which is interesting. Also, be sure you guys subscribe and like this video, because we do break down earnings in real time all the time here using the TrendSpider platform. Great to have you guys in here as we are patiently awaiting the results here.
What do you think, Mike? Double beat?
What do I think? Honestly, I'd be surprised. I'd say double beat. I would go double beat. I would vote yes, personally. But
so double beat and the stock plummets 10%. How does that
honestly
sound?
Yeah, I mean, it wouldn't surprise me at all. That actually happens quite a bit recently. Currently, though, the stock price is kind of dropping into the close here. I personally am not in any HIMS myself. So, full disclosure there, I don't really have any ball in this game, but I am sure excited to watch. But yeah, it looks like we got about 50 votes, and 72% of you guys are saying double beat. So hopefully you guys are right. I'm always rooting for the bulls myself. I don't really ever short anything. So
yeah, I usually stay away from shorting them. I mean, a bit of bias. I imagine most of the people tuning in here probably have some exposure to HIMS. Probably more longs than shorts in this stream.
Most likely. Yeah. But yeah, a ton of people just tuned in. So if you guys are just joining in, let us know what your guys' position is in HIMS. It's currently up 2% in the after hours session. It's getting pretty volatile. It looks like we're probably going to get a pretty good move here. But yeah, absolutely. Someone just commented it's about guidance. I would agree. I would 100% agree forward guidance is going to be crucial here, especially, with all the recent news here with HIMS and the lawsuits and all that stuff. So
Mm-hmm.
yeah.
It always does seem to come down to the guidance, and it's going to be interesting because I think management has he's laid out some pretty aggressive guidance, I think, towards for the next few years, and it's going to be hard to see what happens because, like we said, growth is starting to slow down a bit. I mean, they're pulling the trigger with some acquisitions, obviously trying to get some more growth from there, but it's market's getting saturated, so HIMS is going to have to. I mean, they did well with the GLP-1, but now they need to continue to execute with something else, I think.
Yeah, no, 100%. I haven't really dug super deep into the fundamentals of HIMS, but the stock pretty much relies around that whole narrative itself, right? The GLP-1s.
Mm-hmm. Yeah, I mean at one point, when I first started looking at HIMS, it looked very cheap when you were looking at it in terms of forward growth and those kind of metrics. Of course, now that's kind of been thrown into question, but it's not looking bad here. I mean, I'm looking at the valuation here. It's trading at about 1.4 PG, which again seems to be okay, a little bit rich maybe, but overall, I think. I mean, I'll be tempted to buy if this opens down tomorrow, I think.
Yeah, no, that's fair. That is fair. For those asking if the numbers are out, I do not see them yet myself. Somebody did post something in the chat, but I'm not sure how accurate those are. We just got a big drop on HIMS. Well, decent. We're down about 5%. What time is it? It's numbers probably just dropped right a second ago. Let me see if I can find them for us here. Not seeing them yet. Somebody did. Let's see what somebody in the chat announced. Said smash expectations 669 versus. So they're saying EPS a double beat, but I'm seeing the price move down pretty good right now.
Down about 7%. Like we said, double beats and down double digits.
Yeah, let me
That's
see.
sad.
But I am not personally seeing official numbers yet. I could probably check their investor relations for it to be a little bit quicker.
Check Trump's Twitter. Maybe he said something about him.
True. That's really what moves the markets these days, right? Is just posts on Twitter, tweets, X posts, whatever they're called now. Let's see.
Let's see. I can't see any numbers yet either.
I cannot either. But stock is honestly just a little bit down here in the after hours session. I keep refreshing news widget here. Do not see them yet. Press release, earnings webcast, shareholder letter. Let's see.
Well, there's still time to recover, but I don't know, Mike. You might have to start looking at the next level of support here.
Yeah, right. Yeah, if you guys are just joining in, we were looking at the weekly chart. It is sitting at somewhat level of support there. The next one down there I see is probably more so around this 12 area, right down there. Whoops. So we'll see what happens here. Currently, it is trading at 15. So it's hanging in there. Crazy 5-minute candle there. Currently down about 3.5%. Still waiting to see these official numbers.
The institutions need to see the numbers first and decide what the algos need to decide what to do first.
No, yeah, 100%. I think KTOS did release. It looks like KTOS is actually basically just flat in the after hours session. But they maximize this. I'm seeing a Kratos beat and double beat for KTOS, which is good to see for them, but they are currently flat. And HIMS is actually recovering pretty nicely. It's now not down any. Here's the numbers. 8. So EPS came in at 8 cents for HIMS, beating the 3-cent estimate. And then I'm seeing sales at 617, missing the 619 million estimate. It's from our Benzinga news desk premium news feed here on the TrendSpider platform. So I'm seeing a half beat, EPS beat, but sales slight miss. So maybe that's good. Now the stock is moving up 2% on that.
All right, interesting. I wonder how the EPS breaks down, because sometimes you get some weird financial accounting on those numbers, but
true. No, very true. Very true. Yeah, there's always like the adjusted numbers, a few different ones. So absolutely can attest to that. Let's refresh the news, and we're seeing some forward guidance. So here's a big thing. Forward guidance did not come in super hot. Well, okay, here, 1 second. So we're getting the fiscal year of 2026 sales coming in pretty good. Just about a little bit above the midpoint. It says 2.7 to 2.9 billion expected for 2026 entire year versus the 2.74 billion estimate. It's a little bit higher there. But then the quarter one sales, 600 to 625 million versus 653 million estimate. So the quarter one projections for revenue were not very good. So not the greatest guidance, not even the greatest earnings, because it seems, at least from what I'm seeing, some people are saying they're seeing a beat on sales, but we're seeing a miss. So I guess depends which analysts you were talking to. But yeah, you guys, if you guys are out there in the chat, the numbers came in from what I'm seeing: a sales miss, EPS beat, and not the greatest forward guidance. And the stock is completely flat. So honestly, it could have been a lot worse if you're a long-term investor here in HIMS based on that report for me. Yeah, exactly. Someone said no crash is a win. I would honestly agree with that sentiment there. So interesting.
Pretty much agree on that. Yeah, I don't know. The guidance seems to be, there's a big range there, no? 2.7 to 2.9. So.
Yes, it is a big range. Yeah, absolutely. And it was projected at 2.74. So, for the full year, it's not bad.
Really, if you think about it.
Sorry, say that one more time.
You could actually say the guidance is both higher and lower, because that range is pretty big. So
that's true. Yeah, that's true. Yeah, I mean, stock is flat. So again, I think that's a win. It's probably a lot of this, the whole entire stock itself just being beat down for so long. Maybe, just starting to find some support technically. But we'll have to see what they say on the earnings call. If you guys want me, I'll probably go ahead and stream it. There's a bunch of you guys in here, and I think a lot of people want us to stream the earnings call. It doesn't come out for about an hour, so you guys be sure to stick around until that. We can go ahead and stream that. If you guys want me to go ahead and stream the earnings call, like the video and subscribe. That way I can, go ahead and register for it. Also, I just dropped the link. You guys can sign up for our free weekly market update. We'll likely be covering this. Comes out every Sunday. It's completely free. Just put in your email in the link I just put in the chat, and you guys can get that for free. But honestly, yeah, pretty decent results here on HIMS. Let's take a look at, or go ahead.
I was saying I'd be quite interested in crunching the numbers on what's the quarterly growth looking like, because that's kind of something I always try and look at.
Right.
Kind of a
rate of change. Are you talking about the forward guidance?
Or no, like in this quarter versus the last quarter, like Q4 versus Q3, right? I guess.
Yes. Yeah. Let's add this to the left. So as we saw, revenue came in at 617 million, which is a 28% year over year from last quarter four. And then from quarter three, 2025, it was sitting at 598 million. And now we're at, 617. Not very good at doing math in my head, but that's a decent beat. But something I've noticed, the rate of growth is definitely slowing. Last quarter for 2024 grew 95% revenue year over year, and now this one is 28%. So the growth has been slowing.
Yeah, that's definitely one of the issues for me. I think over the last few quarters, and that's going to affect the narrative because a year ago HIMS was just exploding, and now it's really starting to take a step back, and people are starting to wonder, okay, yeah, it's a good platform, good marketing, but what's the moat, and how saturated is the market getting?
Right. Yeah, and I see it trading at about 6x sales. Price of sales is about, around 6. Which what do you say that's pretty well priced for the HIMS growth?
Yeah, I mean, I think that looks attractive, especially if you look at guidance on profitability. I think this. I mean, I still believe HIMS. It's going to be printing money in a few years, but so the question is, if we can clear this uncertainty that we've got recently, I think we're off to the races. And I guess the valuation looks great right now, obviously, but there's a reason for that, right?
Right. Yeah. Yeah, 100%. I'm seeing a market cap of around like 3.5 billion only as well, and with them almost doing $1 billion in revenue per quarter. I think that's pretty interesting, and they're still growing. The rate of growth might be slowing. Which could change, in the future. Again, that's why forward guidance does matter so much. But if we look at their projections here again, they're seeing what was it, 2.74 or 2.7 to 2.9 billion for the entire year. So yeah, I mean, I'd say it's relatively priced pretty decently as well, and it's holding in there pretty good. It's holding in there pretty good on the charts. Let's see. Go back here to the 5 minutes. It's really, I mean, it's completely flat in the after hour session right now, which is pretty interesting. Let's take a look at what some of these other names. KTOS down 3% on a double beat. I know BWXT reported BWXT up 5.8%. What was their numbers? They had a beat on sales and revenue, so double beat for BWXT.
What's BWXT? I'm not really familiar with the ticker.
BWX Technologies. I am not super familiar. I just know they're reporting earnings today. Let's take a look at the charts. They're trading nearly at all-time highs, actually, BWXT. But we can go ahead and let's actually prompt Sidekick a few different things here. We'll start with HIMS and see what Sidekick has to say now that the actual numbers are out. Before, it was saying hold it or avoid going into earnings, wasn't necessarily super bullish. And now that we have some forward guidance out, maybe that narrative has changed here with Sidekick. So this will be interesting for everybody holding. But again, yeah, from a technical standpoint, obviously, the trend is 100% to the downside, depending on the way you like to trade. If you like to buy weakness, now is obviously a good time as we come to these support levels. But if you're more of a trend follower, momentum trader, I mean, if anything, you're probably looking more on the short side on something like this. Probably kind of scary hopping in a short here all the way down, coming to these support levels. But let's see. So it's still, Sidekick still gives it a hold. Here's the actual numbers plotted out on some nice little charts for us, thanks to Sidekick.
So
let's
nice.
see. So again, EPS beat came in at 8, beat the 3-cent estimate. But as you see, Q4, it's actually down since the Q4 number. And then, yeah, here's the revenue number right here at 617.8 million. Versus, around the 618 million estimate, but, way higher, like almost 200 million higher than Q4's number previously. And here's what it's saying about forward guidance. It's saying in line at midpoint. Yeah, pretty much in line. Again, it was a pretty big range though, 2.7 to 2.9. And then, yeah, the Q1 forward guidance miss by like 4 to 8%. See any recent news here,
and no specific EPS EBITDA guidance for 2026,
right? Yeah, so they might be waiting to show that on the call or something. Do not know, but do not see anything yet, as you said, on EPS. But here's a kind of just a quick summary / breakdown. Massive EPS beat is impressive, but it's against a low ball estimate. I guess they call it the 3 cents a low ball. The real concern is the quarter one guidance missing. Would probably agree with that. No, that's going to be more short term. And then revenue growth decelerated, which is what we were talking about earlier. The rate of change in the revenue growth is, decreasing pretty good. It says the long-term story remains intact. GLP-1 growth, international expansion, etc. But mostly it's focusing here on the weak quarter one outlook. So
here's a question for it, Mike. Can you ask Sidekick what it thinks a good potential buyout price would be for HIMS, like a takeover target?
Interesting.
Because at this point, I think that's kind of how I would measure the downside. It's interesting. Like we saw PayPal today is getting a bit of a buzz around a potential buyout, and that's the kind of thing when stocks get this cheap eventually.
That's true. Yeah.
You kind of start to think in these terms, because HIMS could very easily, I feel like be bought up by one of the bigger boys.
That's very true. Yeah, no, PayPal, like you said, did have takeover news today as well, which caused it to actually get halted to the upside on the day. Pretty wild day for PayPal, if you guys saw that. So really good question here for Sidekick.
I think PayPal was up 5% in the end, or
let's see what PayPal ended up closing at. It's a good question. So yeah, popped up there. Let's go to the 5-minute here. So since like the open, it closed right around actually, about 7% to the upside on PayPal's takeover news. Well, let's see. It is saying, well, for one, 42 to 52 per share, which is about a $10 billion valuation. Interesting. Let's see, current price at 15, and it's projecting, or if it had to pick 42 to 52, that would be absolutely insane. What do you think about that result?
I mean, it kind of contradicts the previous assessment, which was more of a hold.
Yeah.
But yeah, that's not crazy. I mean, that's where HIMS was at about a couple months ago. So I wouldn't say it's crazy. I mean, I'd be happy with a 2-3x from here, but hey, why not?
Yeah. At that'd be basically a 3x to around 45 or so. Let's take a look at the longer term chart here. 45, yeah. I mean, like I think it said 42 to 52, right up here, basically at the top of essentially where it was trading. I've actually never used Sidekick to go ahead and ask a question like that. So that's a really cool question. Actually, it said the acquirer would demand 25 to 35% premium. Management targets 6.5 billion in revenue by 2030, plus 1.3 billion in EBITDA. Says 10% discount rate. Working backwards suggests intrinsic value of 35 to 45 per share. Ran like, I guess, somewhat of a DCF there, which is pretty cool.
It seems to be taking in some pretty bullish estimates, I think, for 2030, which again, I think in the face of maybe the last few quarters and all the problems, kind of, I think the market's beginning to doubt whether we can really reach those numbers by 2030.
Yeah, no, for sure. And here's it listed off some catalysts that could trigger a takeout. It says, of course, continued stock weakness to make it cheaper. Of course, that's basically what we saw with PayPal. GLP-1 business threatens big pharma distribution, buy to control. It mentioned specifically Amazon and CVS needing scale and telemedicine quickly. And then, of course, private equity. So
I don't think private equity is looking to buy anything these days.
Yeah, it's funny. Let's see how the price action is. Yeah, I mean, again, pretty much flat.
Pretty much flat. Yeah.
Yep. And we got some people out there in the chat. Let us know what you guys are thinking on this in the chat. What you guys are thinking of that result here. Let's see. We got Gary from Daily Stock Picks out there. He said HIMS just needs some positive news with the short interest. Yeah, I think he said 35% short interest on HIMS. That is quite a bit. Yes, they did miss revenue estimates.
That's 75%. Did you say?
That's what someone just said in the chat. 35% short interest. Yeah.
Oh, 30, yeah, 35. Yeah, that's what I'm seeing here on Seeking Alpha. So
Yeah.
that is substantial.
Yeah. Let's see. Somebody was asking, did HIMS beat? So they beat EPS, but they missed on revenue. That is basically what happened. And then, yeah, not much else going on there. So if there's any other stocks that you guys are interested in the chat other than HIMS, do let us know while we wait for the earnings call. We still got about 35 minutes or so until that call starts. We can take a look at any other ticker that you guys want to see. You can also look at the stock market map here. You can still see, energy. Let's see how energy is holding in there today. XLE. This one has been talked about pretty widely around social media. Still hanging in there pretty well. Somebody mentioned ONDS. Let's take a look at ONDS here real quick.
Yeah, that's I do own some of that, full disclosure.
Nice. Any what's your breakdown on ONDS?
Well, speculative kind of name in the drone sector. A lot of potential there. Obviously, I think it's a bit of a name's been thrown around FinTwit, so it's got a bit of a retail enthusiasm behind it.
Right.
Yeah, just seems quite interesting. I'd be curious to see. Did they report today? Is that
no, I think somebody's they're reporting early March, so March 11th. We got a few weeks for them. Let's see, but yeah, ONDS, insane revenue growth in just about a year ago. Is that a year? Yeah, Q3 or a couple of years ago. They've had less than $1 million in revenue, and their most recent quarter. Wow, is that true? 10 million in revenue. So insane revenue growth there on ONDS. Let's check out their EPS. EPS, they're still not profitable, but it is trending in the right direction for sure. So
it's getting close to an inflection point. It's a definitely interesting name. With these names, it's always a bit, are they going to, a few government contracts kind of make a big difference. So, you see them pop up a lot on certain days or not, but definitely a very interesting one. I wrote about this a couple of weeks ago. So
yeah, for sure. And I'll drop the link to James's X handle in the bottom in the chat for you guys if you guys want to take a look at his writings. In I believe in your X profile you have your Substack in there as well, right? So you guys can check it out through there. Give him a follow. But yeah, again, a lot of people asking about stuff. Let's see.
All right, we're here to answer the questions.
Yeah, let's take a look at KTOS. Someone asked about that, and they did just report earnings. So honestly, you might as well just go ahead and use Sidekick here.
Yeah, I'm not familiar with the company. I might have to buy it just on the fact that it's called Kratos. That's a pretty cool name.
Yeah, it's a small cap defense name.
It's you're saying all my favorite words there.
Yeah, yeah. Defense has been killing it lately. Look at how is Lockheed holding in these days. Lockheed has been crushing it.
Oof, wow.
Absolutely crushing it on Lockheed Martin. New all-time highs there. Raytheon, same.
Raytheon. Yeah. Got some Teradyne sitting in my portfolio. That's been doing okay.
TER, right? Yeah, I've almost picked this up recently, actually. This one has been trending very nicely. Some other names that I've been looking at is VRT. They recently had this power earnings gap right over here on VRT. It's a name that I've been looking at recently as well. And then, of course, the memory names I've been kind of interested in, like STX. And we mentioned earlier SNDK. I've been setting up.
Yeah, it's I mean, it's pretty wild. I mean, you look at these still look cheap if you look at the the forward earnings expectation.
Right. Yeah, which is insane because they've gone up so much over just the past year or even less. But here's the KTOS earnings breakdown. We got EPS right here coming in at what, 18 cents adjusted versus 16 cents right there. So nice beat. Really nice growth. Always love to see, these charts just up and to the right is exactly what you want to see here, of course. And revenue beat as well. It looks like by 5% or so. 22% versus 2023 quarter four. Interesting. It looks like the forward guidance here on KTOS for quarter one was a little bit lower than anticipated, but the full year was in line. So again, another quarter one guidance miss. Looks like they recently had a U.S. Air Force contract for $12 million, which is pretty cool. Airbus contract as well. UBS initiated coverage with a $79 price target. Let's take a look. What are they trading at now? They're trading at 94 right now, which is obviously $79 below that. They have a neutral rating, so that's not great. But yeah, it's Sidekick is really focused here on the guidance miss, which is fair. I mean, guidance is very important.
Yeah, absolutely. Yeah, I mean, that's an interesting stock. I'll have to look into it some more. I mean, overall, I think the defense stocks and the narrative, I think it's still pretty compelling. You know, whether we like it or not. I know that a lot of people, you know, put a lot of emphasis on this administration, but I do think that, you know, even beyond this administration, we're kind of moving into a world where, you know, I think obviously a little less globalized, perhaps, you know, and that emphasis in defense stocks and it's definitely going to keep increasing. So I think this is one to keep playing long term.
Yeah, fair enough. Fair enough for KTOS. And let's see what else reported today that we missed. We were asking about BWXT earlier. Let's go ahead and run this one through Sidekick as well. Get a nice little view of what's going on BWXT here. But from a chart perspective, it is up pretty nicely. And after hours, it is up roughly about 6%. So good move there. Let's check out the weekly chart real quick. It's trading near all-time highs, somewhat of a double top up there. But let's take a look what Psych say, and we'll see the exact earnings. I think they did also see a double beat, though. Pull it up here in a second. Nice little charts. What are you guys saying out there in the chat? What do you guys think about Fluence Energy, FLNC? I've never heard of that one, but we can probably take a look at it in a second. People ask about Microsoft, AMD, IREN, Netflix, tons and tons of names. A lot of people are saying Netflix looks cheap. Let's take a look.
Yeah, I think it's chilling just above the 200-week EMA too. So, you know, potentially not a bad spot.
I plotted the 200-week moving average. Hasn't really been at that since, you know, it broke below it there in 2022 and then broke back above in 23. But yeah, pretty crazy chart there for Netflix to the downside.
I do own some Netflix, but, you know, it's tough for them. They have to compete with, you know, a lot of other great sources of entertainment like TrendSpider live streams, you know?
Right. Absolutely. I don't know how they can compete against us.
Market share.
Yeah. What is that from the top? Down 43%. 43%. Pretty crazy move. But let's see. What is this? BWXT. They also reported earnings. As you can see, a pretty nice beat on EPS, a very nice beat. How much is that by? Year over year by 17%, and then 22% for the quarter. And then again, a revenue beat. Revenue came in at 885 million versus the 847 million expected, which is, you know, pretty good. Prior quarter four is 746, so they're growing really nice. And finally, here we get a guidance beat. 2026 guidance was raised, which is good. Let's see, forward guidance versus forward guidance. Sidekick is given a buy rating here on BWXT. And you were asking what they do earlier. It's a specialty nuclear components manufacturer. 100+ years of history. Government ops is 81% of their backlog. Commercial ops is 19%. So yeah, that is what BWXT does. And they are pretty much crushing it on earnings. And they are up in the after hours. Take a look again here at the charts. And rightfully so. The relative performance is probably pretty high at 93.6. It's outperforming about 94% of the S&P 500 as of today. So yeah, pretty good report there for sure. And Diamondback Energy, looks like this one actually got kind of crushed on their earnings here.
Might be a good chance to buy the dip.
Maybe. Take a look at the daily charts. Weekly. You can see weekly is setting up in base here that they recently broke out of. Top of that was about 165, and now it's at 168. So it's really testing that support level again. Say their EPS missed pretty badly, but their sales beat by a bit. So yeah, kind of a half beat here on Diamondback Energy, and a big pullback though. We put on the after hours change percents. They are down, about 3%. Not that bad.
Not that bad.
Yeah.
Just a one-off charge, maybe. One of those things.
True. Yeah. Have to dive definitely into those numbers. But again, here on the 200-week SMA, they did sort of base around there and break right back above it. So it's a pretty crucial, significant level of support right there. Let's see. Back to HIMS. Let's see if it's moved at all since. Not really. Yeah, I think everybody is pretty much just waiting for the earnings call here on HIMS. But let's see what else people are talking about out there. AMD and Microsoft. I haven't really looked at AMD in a while. Let's take a look at that one.
AMD's down a bit from the top, but it's still done pretty well over the last year.
Right. Yeah. No, they've had this huge gap right here that they've been really trying to avoid filling. I can see several times they broke into and it bounced right back above it. The 200-week SMA is approaching as well. So yeah, honestly, a really interesting spot here for AMD. They did recently report earnings as well. About a couple of weeks ago, they had a gap to the downside actually. But for long-term investors, I don't know, just right above the 200-day SMA there, it's not too bad. Couldn't go down and fill that gap, but yeah, not a bad look there for AMD.
I think it can't hurt to have some AMD in your portfolio. I think the latest processors are looking pretty good in terms of performance, and so if AI is going to kill us all, it's going to use some AMD chips at least, right?
Yeah, absolutely. Let's see how NVIDIA's hanging in there. NVIDIA, by the way, if you guys didn't know, they have earnings on Wednesday. We'll be live for that. Should be a pretty good market catalyst. What do you think about NVIDIA, James? Any thoughts there before earnings?
Before earnings, not much. I mean, I'm definitely going to be writing about them just because obviously everyone's going to be looking at the earnings.
Sure.
I mean, I think if I had to bet, I would say I think it's going to pop on earnings. I mean, like I said, I think the evidence is there. The AI capex is strong. I mean, NVIDIA is just going to be printing money. That's what I see.
Yeah, honestly, yeah. Yeah, they're still the leader here in AI, but they just have been consolidating for quite a while now. So hopefully, yeah, if we do get a big move, hopefully it is to the upside, because that would be killer for the entire market. So I'm always rooting for the bulls myself as well. But yeah, make sure you guys tune in for that, because that could potentially move the market pretty significantly. I mean, I think it's weighted about, like 9 or 10% in the NASDAQ 100 index. So, a big move on NVIDIA can definitely send shockwaves throughout the entire markets easily. Tesla. People keep asking about Tesla. Again, Tesla coming down to the 200-day moving average as well here. Yeah, I mean,
well, technically, maybe not a bad spot to buy. I mean, I've been a long-term bull for Tesla for a while, but I recently sold out to my positions. I'm kind of just a little bit done, with the Musk at this point. I think but biting off a little more than they can chew. Maybe that's my take at this point.
Yeah, yeah, they have a lot of big plans, but whether they execute on them or not is going to be, what drives this stock. Of course, I mean, They're projecting to make a ton of the AI robots, which is a really cool idea if they can execute it properly. They got the robo taxis, which continues to get pushed back time and time again. I think they're making decent progress on there at that point, but yeah, I don't know.
Yeah, but but it's a crowded market too. I mean, you got Waymo, you got Uber, all kind of fighting for that. And I mean, I was looking at their plans. They're planning on 26 billion of capex, I think, and they've got about 6 billion of free cash flow. So it's a bit of a gap.
It is. No, that absolutely is. How much did you say? 25 billion?
I believe that's the number. I should remember. I think we did an interview this morning with Seeking Alpha about Tesla. So
nice. There you go. Yeah, they do about 25 billion in revenue per quarter on Tesla so far. But yeah, technically, it's sitting at the 200-day moving average. Valuation concerns are definitely real here, though. Absolutely. Yeah. Gary's talking about it. We have a Gary from Daily Stock Picks. I have him on here a lot. He's out there in the chat. He absolutely loves, his full self-driving on his Tesla. I've heard mixed things about it. Gary loves it. I've heard people say that it's great. Heard some people say that, it's a cool feature, but they wouldn't, renew. But I don't know. I think the story with Tesla is probably their kind of robotics to see if that plays out. And so
Gary likes his little gadgets. I've had him on my podcast a few times. He's a good guy.
Who?
Gary from Daily Stocks Picks, right? You said?
Oh, nice. I didn't know you guys knew each other. That's fun.
Yeah. We've talked. Well, he kind of got me into Transpired and stuff as well. So yeah.
Absolutely, yeah. Awesome. Love to hear that. Gary saying CIFR reports earnings tomorrow. Cipher Mining. I'm assuming this is a Cipher Mining. Is that crypto mining or is this?
I believe that's kind of a crypto miner data center play. It's been a popular name on FinTwit as well. I think it's up there with Iron. So, and I'm not sure. I think they're kind of in league with one of the big hyperscalers, maybe, but I'm not 100% sure on that one.
Okay. Yeah. Well, they report earnings tomorrow morning, so should be a fun one to watch if you guys are long in that. What else we got in here? Let's take a look at stock market map real quick. Since semis are leading, there's tons of talk about semis. I want to do a quick scan, find stocks with RP in the 95, and then I'm going to find the top performing stocks in the semiconductor ETF. This is, just a scan I like to run all the time, just to see, where the money seems to be flowing. We got TER in there, which you mentioned earlier. Of course, Micron, the memory names setting up pretty nice. Intel.
Yeah, that's an interesting one too.
Yeah. Government was taking stakes in them, causing a breakout above this 200-week moving average, and they've been hanging there pretty good. What else we got?
Yep. I've been lamenting myself over selling ASML too soon today.
Oh, yeah?
Just looking at that chart, yeah, that's sold that a little bit too early, probably.
Yeah, it happens. It happens. I mean, I feel like it's either you sell too early or sell too late. You just got to pick your poison.
Hey, no one ever went broke taking profits, right?
Absolutely. Very true. But yeah, damn near all-time highs for ASML. Good luck there. But yeah, these are the strongest names in the semiconductor ETF. If you guys were looking for, semiconductor trade, let's see. You can take a look at that same thing in XLE while we're here. Not sure. There's only 22 names actually in XLE, which is not a whole lot. Let's move this down to like a little bit lower here at maybe 85. Here we go. Yeah, VLO has been a big one that I've seen around, and SLB. A lot of good names in here. Exxon Mobil, of course, has one of the most interesting charts, I'd say. It's breaking out of a very long base that started since 2022. So I don't know. I think people are saying energy could be the next gold, so
we'll see. I mean, I wouldn't go long oil, but I might go long some. It's kind of what I was saying with gold before. I think I would go. I am long some of the oil producers. One that I like is PBR, Petrobras. So that's
okay, yeah.
They also kind of playing off of that Brazil trend as well, which I believe it's just been endorsed by Duncan Miller. So,
yep. I think we actually just posted that on X not too long ago. It's what is it? The EWZ ETF, I think, is Brazil. Yeah, EWZ.
That's been killing it. For some reason, Mercado Melli isn't doing very well, but I guess it'll catch up.
Yeah. They're reporting tomorrow. Melli. Let's take a look here.
That's
Melli is down.
Taking a bit of a beating. I'm not sure why. I have to look into it.
Yeah, strong revenue growth, but yeah, today they're down pretty good. You can ask Sidekick if there's any recent news there. Check out my charts of MELI. Was there news that caused it to come down?
Oh, wait. Could it have been the stuff in Mexico, actually?
Oh, that's a good call. It could be.
Yeah, funny enough, I was supposed to be in almost around that area, but kind of changed plans in the end. I'm currently in Colorado.
Okay.
But yeah, pretty wild seeing that. I am going to Mexico in a couple of weeks.
Yeah. Oh, okay. Well, yeah, be safe out there. Hopefully that all clears up by then.
Yeah.
Let's see. So looking at Melli, yeah, it's not saying anything negative news-wise, but you're probably right on the whole Mexico stuff. So it's a good call. Guess it didn't hit the news feed for Melli. Oh,
yeah.
But yeah.
Definitely a good stock. I'm pumping my own bags here, and so guys, go pick up some Melli shares. They're looking good, guys. Come on.
No financial advice. Yeah. Let's see here. But yeah, that was energy. We scanned through semiconductors. What else is taking the charge? Healthcare has been interesting. Let's see how bonds are looking. You follow the bond market at all?
Yeah, not really. I mean, I look at the 10-year and stuff, maybe a bit for macro reasons, but I'm not really into the bonds that much.
Yeah.
The breakout there.
Yeah, it seems to be trying. It's tried multiple times, as you can see, but maybe this time is the time it eventually breaks out. It's the 20-year bond ETF TLT. Finally starting to get a little bit of steam there with rates, being lowered. But let's see. Financials, I think, took a tumble today. XLF down pretty good on the day.
Yeah, arguably a good dip buying opportunity, maybe. Again, maybe speaking of bonds, maybe interest rates curve steeping a little bit, so it could be good for financials.
True. And we got JPM there sitting at the 200-day moving average. It's definitely a solid company to hold long term, I would think. Bank of America, they're all kind of coming down today. Yeah, interesting looks there on the financials sector for sure. Let's see how the index is closed. Yeah, pretty red day overall for the indexes. And I know, James, you said you had to leave sometime around now, so feel free to let me know whenever you got to go. But let's see.
We'll give it another 5 minutes.
Sounds good.
If anyone in the chat is dying to ask me something, now's your chance.
Yeah. If you guys have any other questions, do let us know. Well, we have James around. Let's see. And we only got 14 minutes until the earnings call will start for HIMS.
Are you gonna watch that on the live?
Yeah, I think I'm gonna go ahead and load it up. A lot of people seem to want me to do it. I stream them sometimes when there's a lot of demand for it. But yeah, I'll go ahead and do it. Let's see. Register here for it. So yeah, if you guys are out there in the chat still and you do want to see the HIMS earnings call, all I ask for is a like on this video, maybe a subscribe would be awesome. Yeah, I got that loaded up now, so we'll get that live right when it starts in 13 minutes or so.
So what's the price now on HIMS? It's down 3%, I see.
Take a look here.
A little bit in the red there.
Yeah, it's about 15 and 14 cents, down 2.39% since the market closed. So Now, maybe we'll get some movement here during the earnings call. Hopefully, for all you guys out there that are holding HIMS. Let's see what else we got. Wow, CrowdStrike, CRWD was down 10% today. We have this list here on TrendSpider. I don't know if you ever seen it, but it's top watch stocks on StockTwix. So it's kind of an interesting list. You usually get a lot of the hype names on here.
Yeah. I mean, might as well just call this part the AI murder list at this point.
Pretty much, right? All the stocks in the red here. You got IBM, BDOG, brutal day today as well. There's a ZS, I think that's like Zscaler, CrowdStrike.
All the names at this point. I mean, surely the market's going to bounce higher. I mean, it seems like every single stock is now just oversold to death. So I don't see how. Well, I guess it could keep going.
Yeah. Let's see. Yeah.
But I'm definitely bullish for a little bit of a bounce at least. So I'm selectively looking at some names. CrowdStrike could be interesting, but I guess Claude does cybersecurity better now.
Apparently, right? Apparently, I mean, Claude announces anything, they just tank the stock price of whoever, But there's a lot of people saying I'm not super well versed in cybersecurity, but I think people are saying there's a few that shouldn't be affected at all that are still dumping. So I think it's really just more of a scare than anything. I mean, just not even that long ago, people are saying how much all this vibe coding apps is like a security risk, which is stuff created with AI. So I'm not sure how much people are going to trust AI for cybersecurity needs, but that's what the market is pricing in, right? So
yeah, exactly. It's definitely an interesting one, I think. I have some exposure to a cybersecurity company called Rubrik, I believe.
oh yeah,
BRK. So that's probably. I mean, that's been taking quite a hit, as we can see there.
yeah.
Unfortunately, but hey, good chance to buy the dip, guys.
Yeah, for sure. I mean, brutal market, but yeah, as you can see, the revenue on the reports tab here has been trending very nicely up and to the right. So fundamentally, still looking pretty sound. It looks like they might have earnings coming up. When is that? In early March again, March 12th, and the daily chart got a little double bottom forming.
Maybe a bit of a bullish divergence somewhere.
Maybe. Let's see. We do have a RSI divergences indicator. Let's see. I believe it's this one that works really well. It looks like, I mean, did it even close lower the price? Closed 47.75. So actually, it put in technically a higher low by 20 cents right there.
Okay.
So yeah, it could be a perfect double bottom if it ends up playing out. Never know.
Not too shabby.
Yeah. Oh, that was with after hours data included. Without the after hours data, it did actually go ahead and break below though. But like you said, for the long term, probably something to definitely look into. I mean, in just about a year or two, they've seemed to like almost double their revenue, which is pretty cool.
Yeah, doing well, on these newly IPO'd companies,
Yeah, just recently IPO'd back in 2024. Had a very nice bullish run there. The end of 2024. But yeah, again, just AI is just eating it up along with a lot of other names. So let's see. Yeah, only 9 more minutes until this earnings call starts. I will drop James's X handle one more time for you guys. If you didn't follow him yet, make sure you guys check him out. Check out his Substack and all of that stuff. If you want to follow up with what James is looking into, again,
yes, get out. I'm not very active on Twitter, but if I can get just 2 subscribers from this, I'll start being more active on there. That's my promise to you.
Good.
Give me a subscribe on there.
Yep. Yeah, for sure.
With that, Mike, I will take my leave now. So, but hey, it's been great chatting.
Yeah. No, thank you so much for coming on, James. Been really insightful, and I'm sure I'll be in contact in the future.
Yeah, awesome. Yeah, anytime, man. Let me know. I'm happy to do another one of these at some point.
Awesome. Sounds good, man. All right. Well, have a great rest of your day. All right.
All right. You too.
All right. Take care. All right. Cool. So now we got just about 7 minutes until the HIMS earnings call. If you guys are still out there, let me know what you guys are thinking. Coming into this call, I will go ahead and stream it for us. See if I can't put on the Mentor Q gamma levels indicator for us and see if there's any levels being tested coming in here. I'll take off the 200-day SMA for now and the relative performance. But yeah, I mean, pretty crazy lack of movement here, if anything, you guys, on HIMS. As you can see, it did actually, it's sitting at the put support 0 DTE level. This is the Mentor Q gamma levels indicator, by the way. What it does is it uses options flow to go ahead and just plot levels right on your chart that you can use as support and resistance, and you can scan for them all here on TrendSpider. I will, if you guys want to take a look at them, drop them down in the chat below, and they are available here on the TrendSpider platform. By the way, guys, it is the last day of the President's Day sale. Here over at TrendSpider, you can save up to 40% off of TrendSpider. And that ends in just 8 hours. So if you were looking to try out the platform, you can see you only have 8 hours left to get a good deal on it. So make sure you go to trendspider.com and check it out. Michael Malinsky says, not making a move on HIMS until tomorrow. That's fair. Retail likes it, but little to no support from institutions. Yeah, I mean, let's see. I mean, I don't know. The institutional ownership from now I'm seeing looks at about 80%. Let's check out what the analysts are thinking here. We have the analyst estimate history indicator, which is going to plot the price targets for analysts. We have an average price target around 30, and the lowest price target is around 16 or so, and then the highest is around 60. Michael Malinsky, the earnings calls in 5 minutes, you guys. I will go ahead and stream it. Don't worry. Somebody's asking about an indicator that shows retail versus institutional buying. Yes, I believe that was the trade pulse indicators. The large deal one was institutions. And the momentum indicator is retail. So it's mostly an intraday indicator to my knowledge. But if we plot it maybe on the daily chart, maybe we can see something here with the large deal. The large deal indicator, I'm seeing tons of red here on HIMS. So probably right. Maybe institutions are selling. Today, intraday, lots of selling as well. Looks like on the large deal order flow going into earnings, which is interesting. Get on the after hours data here. Yeah, I'll leave that up for you guys. And the link for that, I can drop the trade pulse indicators down below. For you guys, if you guys want to go ahead and check those out, the link is down there. And yeah, then the earnings call is going to start in just 3 minutes. So again, all I ask for you guys, I mean, I have to go in here and use my own email to register for these things. So if you guys could just subscribe to this YouTube channel on TrendSpider here, would be greatly appreciated. That's all I ask, completely free. Maybe even like the video if you're feeling nice. As we come into the HIMS call, is there any final words that you guys have going into HIMS? Got the earnings call starting in a few minutes. If you guys have any final words of wisdom for me, let me know. I am going to use the 5 minute, and I'm going to put these labels just a little bit more to the right over here. There we go. And yeah, just 2 minutes left now, you guys. So one last thing, if you guys do want free market updates and potential trade ideas sent to your inbox every single week, can use the link down below to sign up for free. It is in the YouTube description. It's the first link, and then down in the chat below. Send you guys a free market update every single Sunday. It's very informative. Highly recommend signing up for it. I'm sure we will cover a lot of these massive earnings. I mean, honestly, we got NVIDIA earnings coming up on Wednesday as well. So it's going to be a pretty big earnings week. So you guys definitely want to stay informed. And our free market newsletter is a great way to do that. Let me check out this call. What I'm going to do before the call starts, I'm going to make sure my audio is set up properly. There we go. Move this out of the way. Philip is saying it's going to hit 24 tomorrow. That would be insane. But yeah, the HIMS earnings call is starting in just a second here. So we'll see what they say. Just hit 2 p.m.
Thank you for standing by. My name is Eric, and I will be your conference operator today. At this time, I would like to welcome everyone to the HIMS and HERS third quarter 2025 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you.
You know what? I think this might be the wrong earnings call. Hold on here.
Fourth quarter and full year
Call.
2025.
You guys hear this call?
Today, after the market closed, we released this quarter's shareholder letter, a copy of which you can find on our website at investors.hims.com. On the call with me today is Andrew Dudum, our co-founder and chief executive officer, and Yemi Okupe, our chief financial officer. Before I hand it over to Andrew, I need to remind you of legal safe harbor and cautionary declarations. Certain statements and projections of future results made in this presentation constitute forward-looking statements that are based on, among other things, our current market, competitors and regulatory expectations, and are subject to risks and uncertainties that could cause actual results to vary materially. We take no obligation to update publicly any forward-looking statement after this call, whether as a result of new information, future events, changes in assumptions, or otherwise. The risks, uncertainties, and other factors that could cause actual results to differ from our forward-looking statements are described in our earnings release and SEC filings. Please see our recent earnings release and most recently filed 10-K and 10-Q reports for a discussion of these risk factors as they relate to forward-looking statements. In today's presentation, we also have certain non-GAAP financial measures. We refer you to the reconciliation tables to the most directly comparable GAAP financial measures contained in today's press release and shareholder letter. You can find this information as well as a link to today's webcast at investors.hims.com. After the call, this webcast will be archived on the website for 12 months. And with that, I'll turn the call over to Andrew.
Thanks, Bill. Good afternoon, everyone, and thank you for joining us today. I'm excited to tell you about the tremendous progress we're making at HIMS and HERS. This starts, as it always has, with our fundamental belief that everyone should have access to the highest quality of care available, customized around each person and their individual needs. Today, only the wealthiest in our society can expect this level of care. By continuing to put the customer at the center of everything we do, we are changing that. Our teams are pursuing this vision every day across an expanding set of specialties. We have proven that access to care doesn't need to be limited by privilege, prices don't need to be prohibitive, and customers don't need to settle for a one-size-fits-all approach. We believe GLP-1s are a case study in how medicines are coming to market differently. The dynamics we've seen over the last 18 months, including US prices for injectable GLP-1s falling more than 80%, reflect a broader disruption happening within the United States. Customers are demanding better access, more direct engagement, and prices that align with other regions around the world. That pressure is forcing a long overdue conversation. How do we use today's technological advances to help more people feel great? We see this moment as the early stages of a new model that actually works for everyday people. Netflix and Spotify reshaped how people could access not only a broader range of content, but also the best the industry has to offer. Healthcare must evolve toward that same consumer-oriented distribution model. That evolution will demand creativity and new commercial frameworks where consumer platforms and drug makers work together to help people get healthy. Our platform puts us at the forefront of that change. Before ever scaling our weight loss offering, we built a platform that surpassed $1 billion in revenue and achieved profitability by scaling offerings like sexual health and dermatology. Specialties that continue to grow today with strong unit economics that allow us to fund the next opportunities for growth. GLP-1s are an example of one such opportunity and have provided a meaningful accelerant to the business, but they are a single treatment within a single specialty on a broader global consumer platform that is growing stronger and more diverse with every investment we make. At the end of 2025, over 2.5 million subscribers on our platform were benefiting from our pursuit of this vision. As we expand new offerings that can serve our customers as they enter different life stages, we are increasing our ability to build and maintain deep, longer-term relationships. With only a small minority of subscribers utilizing a compounded GLP-1 treatment, it is clear to us the impact of what we are building reaches well beyond a single weight loss treatment. By leveraging the same technological advancements that have completely changed how we experience entertainment, how we travel from place to place, and even how we manage our finances, we are making high-touch, personalized care accessible to millions of people across more specialties and in more geographic markets. No one is better positioned to create a world where more people can access quality care. That is our core belief, and it's one we do not take lightly. We've spent years building operational expertise across each of our offerings, growing customer awareness and leveraging scale to drive broader accessibility to personalized care. As a result, we can now bring new offerings and markets to the platform more quickly and efficiently than ever before, whether you live in a rural Midwestern community in the US, a large city in the UK, or somewhere in between. To give you an idea of how our speed to market has changed, historically, we targeted launching one new specialty every year, and each of these usually required a few years of development before becoming meaningful contributors. Longer tenured offerings like sexual health and hair loss for both men and women took 3 and sometimes even 4 years to eclipse 100 million in annual revenue. Comparing this to how we operate today is truly remarkable. As we've shared in the past, our weight loss offering reached 100 million revenue run rate in less than 7 months after launch, and that excludes any contributions from compounded GLP-1s. Within a span of 3 months in 2025, we launched our new labs offering, as well as hormone therapies with support for low testosterone, menopause, and perimenopause. In just 90 days, we created 3 distinct new entry points to our platform, each addressing large, underpenetrated markets that have been largely ignored by the traditional healthcare system. While not every new offering will scale at the same pace as weight loss, early customer success and accelerating customer adoption following the placement of our Super Bowl commercial gives us confidence that each of testosterone, menopause, and labs can eclipse $100 million in annual revenue in the near future. Even more energizing, since launch, we've identified that over 70% of lab customers may be eligible for treatment plans offered through the platform, and more than 95% of individuals utilizing a testosterone support offering experience an increase in testosterone levels within the first 2 months of treatment, with an average increase of over 80%. These 3 new entry points are not simply new offerings. They are the start to far deeper relationships and value for our customers. These early signals demonstrate our evolution towards providing access to more proactive and preventative care. Insights we glean through our platform can inform an expanding selection of care pathways and can streamline the process for customers to get support where they need it the most. Today, we are addressing areas like cardiovascular risk, metabolic dysfunction, hormone levels, and expect that over time, we'll add areas such as performance, recovery, and sleep. As we accelerate the development of a more comprehensive approach in the US, we're also taking significant steps to extend our reach abroad. We see expansion into new international markets as the next logical step in bringing the trusted HIMS and HERS experience to more people and to more places around the world. Last year, our acquisition of Zava deepened our presence in the UK and enabled our entry into Germany, France, Ireland, and Spain. More recently, the acquisition of Livewell extended our presence into Canada, one of the first markets that is expected to have access to generic semaglutide. And just last week, we announced we signed an agreement to acquire Eucalyptus, a leading global health innovator. Upon closing of the transaction, we will further strengthen our UK and European presence while also bringing the HIMS and HERS brands into new markets like Australia and Japan. I've known Tim Doyle, the co-founder and CEO of Eucalyptus, for years, and have enjoyed watching him and his teams build an innovative healthcare experience that is focused on safe, highly accessible care and puts customers at the center of everything they do. I am confident he is the right leader to make the HIMS and HERS experience central to how customers in each of these new markets approach their daily health. The opportunity is significant. We believe that with the deliberate investment and execution, we will have the teams in place to drive category leadership in each of these markets, positioning our international business to scale to more than $1 billion in annual revenue within the next 3 years. This growing presence across both specialties and geographies provides important building blocks for the future of healthcare we are driving. There are 3 key elements to that future, and we are investing across technology and infrastructure to bring them to life. First, innovation in diagnostics and devices will continue to evolve how each person understands their whole picture of health. With our recent lab launch, we are providing customers with over 130 biomarkers across key areas of long-term health. Results are delivered directly within our app, where AI-supported readouts highlight metrics that are already optimized and those that need attention, while also educating customers on both lifestyle and clinical interventions. And with the acquisition of YourBio, we plan to make targeted and condition-specific lab testing more convenient and approachable with technology that can be used in the comfort of your own home. Together, these new services and expanding capabilities will give customers a deeper understanding of their health and help providers make more informed decisions. Over time, we expect to build on this with the integration of wearable technology, like continuous glucose monitors and daily fitness trackers, as well as expanded testing options that bring insights like polygenic risk scores directly to our customers. Second, AI will become a critical layer on top of that data that helps define, refine, and implement precision treatments, interventions, and lifestyle adjustments. Our growing technology and product teams reporting into Mo Al-Shanawi and Deirdre Kaur are ensuring that as our offerings expand and deeper insights help uncover areas of need, we are building an experience that makes access to proactive care simple and readily available. We envision customers being able to add adjust, or switch treatments within a single intuitive platform as their health evolves. At the same time, static and reactive communication is being replaced with proactive conversational support to guide customers throughout their journey. Early deployments of proactive messaging and weight loss have already driven more than a 50% increase in weight logging frequency, signaling an ability to improve customer commitment and engagement as they progress in their weight loss journey. And behind the scenes, automation is removing cumbersome processes and facilitating administrative interactions, allowing providers to focus on clinical decision-making. The result is faster responses, higher customer satisfaction, and a scalable model that can deliver access to high-touch care to millions of people while still prioritizing clinical excellence. And third, deeper data and more proactive care demand more precise, personalized treatment plans for each customer. Doing that at scale means investing in an infrastructure that can deliver access to personalized treatments and custom formulas that safely bring together pharmaceuticals and supplements. We know treatments should be driven by what's best for the customer, not by what's covered by insurance or what's currently in stock at the pharmacy. We've spent years building the physical infrastructure required to deliver access to truly personalized care at scale. Over the last 3 years alone, we've invested more than $300 million into our facilities, expanding our footprint to over 1 million square feet across pharmacy operations, lab testing capabilities, and R&D supporting innovations like peptide therapies. This foundation allows us to combine quality with broader access and continued innovation so that access to personalized care is delivered consistently across our platform. The first two pillars, deeper data and stronger technology, are advancing across the industry. We believe those advancements demand the third pillar, a scalable way to make the final step in healthcare more precise and more personal. We believe our technology and infrastructure investments put us in a leadership position to bring a more individualized experience to tens of millions of customers, while maintaining the high standards customers have come to expect around the quality of their care. At HIMS and HERS, the team wakes up every day motivated to change an outdated healthcare system that has refused to put the customer first. As we work to fundamentally reinvent these systems, we expect to encounter challenges. It takes time for industries to change, but we are navigating this on behalf of our customers. When it comes to ensuring more people have access to the most innovative and groundbreaking treatments and services available, we will continue to fight, holding true to our mission that we can make more people feel great through the power of better health. Pursuit of this mission takes commitment and resilience. That was true at our founding, and it is true today. We will continue to push for better, more accessible care around the world by focusing on a consistent set of priorities, bringing more offerings to our customers with more insights and deeper personalization capabilities, and when appropriate, partnering with leaders who also believe in a better healthcare experience. By investing with conviction across these priorities, we believe HIMS and HERS will be a leader in the next era of healthcare, which will continuously evolve to better serve the customer. This conviction underpins our confidence in our ability to push towards our 2030 targets of $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. At HIMS and HERS, we are honored to lead the shift towards a consumer-centric system. We feel both the privilege and responsibility to change what people expect from their healthcare. It is why we started on this mission, and it continues to motivate us every day. Thank you. I'll now pass it to Yemi to walk through the financials.
Thanks, Andrew. I'll start by providing an overview of our fourth quarter financial performance before diving further into our outlook for 2026. Our progress in 2025 reflects the increasing scale of our customer-first platform as we continue to expand access to high-touch, personalized care across more conditions, enabling us to build deeper, more valuable relationships with our subscribers. Subscribers on our platform grew to over 2.5 million in 2025 as we continue to execute on our mission of helping the world feel great through the power of better health. Personalized solutions remain a cornerstone of our ability to attract and retain subscribers. Personalized solutions encompass tailored treatments and programs that seek to address key consumer needs and concerns. These needs include tailoring dosing to meet individual patient needs, simplifying treatment regimens by leveraging a single solution to address multiple conditions, improving customer options through alternative form factors, and providing data-driven insights and tools to supplement medical treatments. In 2023, we began increasing investment to expand the assortment of personalized treatments and have seen resounding success. Since the end of 2023, we've added almost 1 million net new subscribers to our platform. At the end of 2025, approximately 65%, or 1.6 million of our subscribers, were utilizing a personalized treatment. The differentiated solutions that we are able to provide not only aid in drawing new subscribers to our platform, but also drive higher retention and customer lifetime value. Incremental insights and data from new offerings like labs will enable us to better attract potential consumers for treatments across newer specialties such as hormonal support. We believe this will increase subscriber engagement and have already seen early success signals as monthly revenue per average subscriber increased 11% year over year to $83 during the fourth quarter. Continued subscriber growth and deepening engagement are translating into financial success. Revenue in the fourth quarter was $618 million, representing a year-over-year growth rate of 28%. For the 2025 fiscal year, revenue was $2.35 billion, representing a year-over-year growth rate of 59%. Our 2025 results continue to reinforce our conviction that we have a strong multi-year growth runway across three key areas of the business: the HIMS brand in the US, the HERS brand in the US, and an expanding international footprint. Within our HIMS brand, we drove year-over-year revenue growth of over 30% in 2025, despite headwinds resulting from our deliberate efforts to pivot away from generic on-demand sexual health solutions. Since 2023, we've introduced several combination treatments within our sexual health specialty that address health concerns such as low testosterone, heart health, hair loss, and vitamin deficiencies. Nearly 500,000 subscribers on our platform are benefiting from these daily solutions, and the year-over-year growth of those subscribers consistently exceeded 30% throughout 2025. Over 2026, we expect to continue this transition. Our expectation is that retention benefits from our daily sexual health offerings, as well as the evolution of new offerings such as testosterone support, will continue fostering robust growth for the HIMS brand. Switching to HERS, in 2025, our HERS business continued to display triple-digit revenue growth and accounted for nearly 40% of U.S. revenue. Similar to our HIMS business, revenue growth is increasingly driven by deeper engagement across a broader set of women's health needs. Continued expansion in established specialties like weight loss and dermatology is being bolstered by new offerings in menopause support and diagnostics, presenting opportunities to strengthen customer relationships and extend their tenure on the platform. The depth that we are able to provide across a breadth of specialties, making us rely on no one single offering, is the power behind our domestic business. Strengthened tenured offerings such as men's dermatology, women's dermatology, and sexual health allowed us to surpass $1 billion in revenue, reach adjusted EBITDA and net income profitability, and generate positive free cash flow. This allowed us to aggressively invest in our weight loss offering and add a meaningful growth vector to our portfolio with access to oral and injectable weight loss treatments. Consumers have experienced success with both oral solutions and injectable GLP-1s available through our platform, with a typical consumer reporting average weight loss of approximately 22 and 29 pounds in their first year of treatment, respectively. While GLP-1s have accelerated our trajectory, the majority of revenue and cash flow generation across our portfolio is generated from our non-GLP-1 offerings. Higher margins from our more tenured offerings will be instrumental in providing resources necessary for investment to scale the next wave of specialties, inclusive of weight loss, lab testing, low testosterone, and menopausal support. Our consumer-centric approach has resulted in immense success in the U.S., where revenue grew over 50% year over year to more than $2.2 billion. Our belief is that the value we bring from our approach transcends borders. In 2025, we welcomed Zava and Livell to the HIMS and HERS family, and now we're able to serve consumers in Germany, the UK, Ireland, Spain, France, and Canada. International revenue grew almost 400% year over year to $134 million. We expect our international footprint to become a more meaningful portion of our revenue in the future. As a reflection of this importance, we will adjust our revenue disaggregation from online and wholesale to U.S. and rest of world revenue going forward. With that, I'll now turn to profitability dynamics before diving deeper into our balance sheet and future plans for investment. Adjusted EBITDA in 2025 increased nearly 80% year over year to $318 million. Adjusted EBITDA margins on a full year basis expanded nearly 2 points relative to 2024 to 14%. In the second half of 2025, we meaningfully invested to increase the density of our technology talent, scale new specialties, and deepen our policy and safety talent to facilitate the continued expansion of our operational footprint. Adjusted EBITDA was $66 million in the fourth quarter, representing an adjusted EBITDA margin of 11%. Gross margins in the fourth quarter declined approximately 2 points quarter-over-quarter to 72%, as tailwinds from continued growth in non-weight specialties were offset by growing revenue contributions from our international markets, expenses related to the launch of new specialties, and pressure from the shorter shipping cadences and weight loss that we discussed last quarter. Prior investments in our brand and product suite continue to be a key driver in our ability to drive marketing leverage. Marketing as a percentage of revenue in the fourth quarter and fiscal year 2025 was 39%, representing a 7-point year-over-year improvement. We continue to see acquisition gains in lower cost and non-paid channels following years of investments in brand campaigns to drive greater top-of-funnel awareness. Additionally, retention improvements across our subscriber base are compounding as we directly address more customer needs with a growing portfolio of personalized solutions and a customer experience that is driving stronger engagement. G&A costs as a percentage of revenue increased 2 points year-over-year in the fourth quarter as a result of increased international headcount, as well as additional expenses related to the hiring of new leadership talent. On a full-year basis, G&A costs as a percentage of revenue were essentially flat relative to 2024. A similar dynamic was seen in operations and support costs. Technology and development costs as a percentage of revenue increased to 7% for both the fourth quarter and full year. Investment in engineering and AI talent has resulted in modest deleveraging, but we believe the ROI will be substantial as a result of an ability to move faster and elevate our consumer offering. We have already seen early signals, as demonstrated by our ability to bring multiple specialties to market in the second half of 2025, as well as our ability to improve the customer experience and realize operational efficiencies. Net income for the full year increased notably year-over-year to $128 million, as compared to 2024 net income after adjusting for a tax benefit in the prior year related to the release of a domestic tax valuation allowance. While we expect to maintain annual net income profitability, our priorities continue to center on long-term free cash flow generation. This enables us to expand our operational capabilities as well as accelerate our strategic roadmap, including through M&A. In 2025, we generated $300 million in operating cash flow. Strong cash flow generation from our domestic business, as well as the strength of our balance sheet, allowed us to actively put capital to work across each of our priorities. First, we invested over $225 million into our operations through discretionary CapEx to drive both expanded capacity and new capabilities across our domestic facilities, which now total over 1 million sq ft. Second, in 2025, we entered into agreements to deploy over $330 million in purchase price consideration towards acquisitions that have allowed us to accelerate expansion into new international markets, as well as launch R&D efforts in the peptide space. We believe YourBio, which recently closed in 2026 for approximately $150 million, will ultimately allow us to augment our diagnostic specialty in the future with a painless at-home offering. Lastly, we repurchased roughly $90 million worth of common stock in 2025, with $80 million worth of shares repurchased in the fourth quarter at an average price of $39. In the fourth quarter, we completed our $100 million share repurchase program and have $225 million remaining on the $250 million repurchase program that commenced in November of 2025. After meaningful investment in 2025, we generated over $57 million in free cash flow and ended the year with $929 million of cash, short-term, and long-term investments on our balance sheet. We believe our ability to leverage our financial position and the rigor of our capital allocation framework will position us to rapidly serve a broader set of consumers, placing us on track to become one of the largest consumer-centric healthcare platforms in the world. Our capital allocation priorities will focus on deepening our ability to combine data and insights, thoughtfully expanding personalized solutions, and elevating digital and physical consumer assets to improve the healthcare experience for tens of millions of consumers. In 2026, we expect this to materialize across the following areas. First, we will continue investing in the capacity and capabilities of our operational facilities. We expect investment in these facilities to unlock our ability to respond to insights from labs and eventually wearables with a broader set of personalized treatments. Additionally, verticalization reduces our cost to serve, ultimately allowing us to pass value back to consumers and selectively expand margins. Second, we will continue to invest in new experiences and physical technologies that will allow us to make treatments more accessible for our subscribers. We believe the integration and scaling of YourBio, which uses a virtually pain-free microneedle blood sampling technology, is a great example of this. Long wait times from overcrowded facilities, fear of pain, or an inability to find the time to drive to a facility all serve as barriers to prevent many consumers from obtaining deeper insights into their health. We expect that investments in these areas will ultimately allow us to provide users with the ability to perform blood draws from the comfort of their own home, and AI technology can help orient providers toward the tests that are most impactful for a subscriber at any point in time. Third, we expect to continue investing in technology. We are one of the few platforms that has insights into the patient journey from intent to outcomes, and with Labs, this differentiated capability further expands. A world-class product experience, high-quality provider network, and personalized solutions backed with data are differentiating factors for us. We expect these investments to deepen customer engagement and retention, as well as unlock operational efficiency gains over time. Fourth, we expect to continue expanding the network of partners that will further our ability to become a curator of world-class healthcare services. Over the coming years, our ambition is to partner with other companies that share our vision to unlock more value for our customers. International expansion will perhaps be one of our most significant areas of investment in 2026 and the coming years. We recently signed a deal to welcome Eucalyptus to the HIMS and Hers family. Upon closing of the transaction, Eucalyptus will complement Zava and deepen our presence in the UK, as well as unlock a model more closely aligned to our domestic business in Germany, Australia, and Japan. Assuming the transaction closes, our expectation is that our collective international business will break even within 12 to 18 months, inclusive of Eucalyptus. Eucalyptus deploys a rigorous capital allocation framework similar to our own. They currently have an annual revenue run rate north of $450 million, and strong execution enabled them to drive triple-digit year-over-year growth in each quarter of 2025, while also maintaining line of sight to profitability. While we do not expect the business to drive meaningful adjusted EBITDA losses, we do not expect to drive meaningful margin expansion for several years in our international business. Across the majority of international markets, we expect to take a growth-oriented approach and focus on reaching as many consumers as possible before focusing on margin expansion efforts, even if that means running certain markets at or near break-even on an adjusted EBITDA margin basis. We saw this approach work in the US and will utilize a similar playbook to progressively expand markets towards margin expansion in the future. This is our largest acquisition to date at up to $1.15 billion of total consideration. The upfront payment at close is expected to be approximately $240 million, with remaining payments for guaranteed consideration and earnouts to be made through 2029. As we have done in the past, we will monitor the landscape for potential opportunities to reinforce our balance sheet to maintain optionality in ways that thoughtfully consider dilution. However, we are prepared to fund the majority of the Eucalyptus transaction with the strength of our existing balance sheet and cash flow generation from our domestic operations through 2029. With that, I will provide an additional perspective on our initial outlook for 2026. Note that these numbers do not include the Eucalyptus transaction. In the first quarter, we are anticipating revenue in the range of $600 to $625 million, representing a year-over-year increase of 2 to 7%. We expect adjusted EBITDA to be between $35 to $55 million, representing an adjusted EBITDA margin of 7% at the midpoint of both ranges. For the full year, we are anticipating revenue of between $2.7 to $2.9 billion, representing a year-over-year increase of 15 to 24%. It is our expectation that 2026 adjusted EBITDA will be between $300 and $375 million. These adjusted EBITDA and revenue ranges imply an adjusted EBITDA margin of 12% at the midpoint of both ranges. Behind our outlook are the following assumptions. First, we expect an approximately $65 million revenue headwind in the first quarter, resulting from the change in shipping cadences in our weight loss business following the shift to 503A fulfillment. For context, in the second half of 2025, this revenue headwind was approximately $40 million. We expect this effect to mitigate as cohorts continue to stack throughout the year. It's important to note these dynamics affect only the timing of revenue recognition and not customer demand or engagement. Demand for weight loss remains strong, with subscribers growing more than 70% year over year in the fourth quarter. We expect subscriber growth within our weight loss offering to remain strong throughout 2026. Second, our investment in our 60-second Super Bowl commercial is expected to place additional pressure on EBITDA in the first quarter. This investment played an instrumental part in our ability to educate consumers about our platform, as well as evolve the brand towards being known for proactive healthcare solutions. No change is expected from our framework that calls for a payback period of less than 1 year on marketing spend. We expect adjusted EBITDA margins and revenue growth to scale from the first quarter. Third, our expectation is for several of the newer offerings, such as low testosterone, menopausal support, and labs, to incrementally scale throughout the year. Newer offerings will play a key role in maintaining solid growth for HIMS, as well as helping the HERS portfolio continue to scale and reach its first year of $1 billion in revenue. Investment across most offerings will be stage-gated and incremental investment released as these new offerings hit unit economic and scale milestones. We believe each of these offerings has the potential to drive meaningful future growth and will play a critical role in our ability to obtain our 2030 aspirations. Fourth, investment in our platform's product experience, technology, and AI capabilities are expected to become a larger priority in 2026. We believe we are in a unique position to connect deeper health insights with improved conversational support that is available whenever our customers are in need. Our guidance affords us the flexibility to lean into these opportunities to create a more engaging customer experience from start to finish, driving stronger conversion and retention over time. Finally, international expansion will offer a meaningful driver of incremental growth in 2026. Our initial outlook anticipates at least $200 million in revenue contributions from international markets. This excludes any additional contributions from our acquisition of Eucalyptus, which is expected to close in the second half of this year. Assuming the transaction closes as expected, we would expect additional second half revenue contributions of at least $200 million. Our primary objective in international will be oriented toward growth expansion. While we do not expect meaningful adjusted EBITDA losses, we are expecting newer international markets to run near break-even. We left 2025 with a great deal of momentum that has allowed us to continue bringing new sources of value to millions of subscribers. Our success in the U.S. places us in a position to thoughtfully expand and rapidly scale across international markets such as the UK, Germany, Canada, Australia, Japan, and others. Strong free cash flow and adjusted EBITDA from tenured specialties in our domestic operations will allow us to continue expanding specialties while also concurrently growing our subscriber base across strategic markets. In the near term, we expect many of these international markets to run at break-even, but in the medium to long term, to become meaningful growth and profitability vectors as we optimize and realize economies of scale similar to what we achieved in the U.S. Continued growth in the U.S., combined with the scale of the international opportunity in front of us, reinforce our confidence in our ability to meet or exceed our 2030 ambitions outlined last year, at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. Our success would not be possible without the significant efforts of HIMS and HERS employees around the world. I'd like to thank them, our subscribers, and our shareholders for supporting us in our mission to help the world feel great through the power of better health. With that, I will now turn the call back over to Bill to kick off Q&A with 2 questions from our retail community.
Thanks, Yemi. And thank you to everyone who sent us questions over the weekend. First from Jay, who has a question on our growing international footprint. With the acquisition of Eucalyptus accelerating international expansion into Australia, Japan, and building a deeper presence in Western Europe, could you share more about the company's long-term vision and key priorities for global growth over the next 3 to 5 years? How do you plan to integrate Eucalyptus's operations and brands to drive synergies?
Yeah, thanks, Bill, and thanks, Jay, for the question. I think from the beginning, we've always believed that the vision for consumer-centric health was global. When you think about great healthcare, it's a thing that we care about most personally. It's a thing that we care about for our family. And yet, no matter where you are, the US, the UK, Germany, when you talk to actual people, their frustration with the current status quo is consistent. And so, we have really huge ambitions globally. At the core of it is to target the 10 key most critical markets and to win them handily over the next 12 to 24 months. Across acquisitions of Zava and LiveWell, and with the addition of Eucalyptus, I think we have those critical pieces in place. I've known Tim Doyle for going on 4 to 5 years. He's the founder and CEO of Eucalyptus, and have absolutely loved watching that team execute. They're exceptional leaders with a strong shared commitment to the consumer. And so, when I look at the combination of the two, I think we have bold ambitions to see the HIMS and HERS brand be unified across all of these major markets within the next year or two, and a North Star of $1 billion plus in incremental international revenue in the next few years as well.
Thanks, Andrew. And the next question comes from the HIMS House retail community. What impact do you expect from the regulatory and legal scrutiny on growth numbers for the next few years? How will you reduce risk from a potential ban on compounding GLP-1s, and what categories are positioned best to pivot the business away from GLP-1s?
Yeah, it's a great question. I think to maybe step back a little bit, when I founded the company nearly 10 years ago, the vision here, was not to launch treatments on a website. it was to disrupt how customers have access to great care. And I think that opportunity today is just as strong as it was, nearly 10 years ago. When we first launched, for people that have been following us, people used to call us the Viagra company, right? We were an ED only business. And for years and years, that was the headlines, that was the concern, the dependency on Viagra, that category. And then as we progressed and we launched the HERS business and that was getting started, people started to worry, hey, maybe this is a HIMS only business. Maybe HERS doesn't have the ability to replicate itself and scale as well. And now that business is, achieving this year, hopefully $1 billion plus in revenue. And I think the reality is HIMS and HERS has always been and continues to be more than one treatment. When you look at the business today, it's important to remember that the majority of our revenue and profitability is driven by offerings outside of weight loss. And really the amount of patients actually on the compounded GLP-1s is actually, quite a small minority of the aggregate subscriber base. And so when referring to, pivoting the business to, manage the dynamics in the ecosystem, I don't really think that's how we feel about things internally. I think we plan to continue to operate like we always have, which is expanding the offering systematically to patients, broadening the assortment on the platform and the care that we can offer them, deepening our relation with them, deepening our understanding of them, expand into new categories like labs and menopause and low T, work on innovation and R&D for future categories like peptides, which we're working on right now, and ultimately add more value to customers' life in an expanding set of markets. I think between our existing diverse business lines, the pace of the new expanding categories that I touched on in the pre-recorded remarks, as well as now this accelerating international business, there's just really never been a point in our company's life where we've had such a durability in growth engines to achieve the much broader vision for the business.
Thanks, Andrew. And with that, I will pass it back to the operator and we can begin the regular way analyst Q&A.
At this time, if you would like to ask a question, press star, then the number 1 on your telephone keypad. To withdraw your question, simply press star 1 again. We kindly ask that you limit your questions to 1 and 1 follow-up for today's call. We will pause for just a moment to compile the Q&A roster. Your first question comes from the line of Maria Ripps with Canaccord. Please go ahead.
Great. Thank you so much for taking my questions. First, I just wanted to ask about your U.S. weight loss business, maybe expanding a little bit on the last question, sort of given all this sort of maybe increased scrutiny around compounded GLP-1s, how should investors think about sort of the durability and maybe growth profile of that business kind of over the next few years? And then secondly, maybe more broadly, how is your marketing mix sort of evolving as you expand into sort of broader, less stigmatized health categories domestically? And are you seeing sort of structural improvements in CAC and lifetime value sort of as your brand matures?
Yeah, great question, Maria. I'll maybe answer the first part and let Yemi handle the second. I think when we look at the weight loss business domestically, there's an increasing range of assortment, which I think is really important. Like we follow what is important for the patients. When you look at both the next generation therapies that the major drug companies are bringing to market, when you look at the pipeline of biotech in phase 2 and phase 3, we deeply believe that in the next 2 to 3 years, there's going to be a dozen or maybe 2 dozen added treatments that are going to make a big difference in people's lives. And for us as a platform and for our patients, we deeply believe that assortment matters. And so I think we will continue to adjust the model as necessary to ensure that we have the breadth of assortment that patients need and want. As Yemi shared in our remarks, before we even had the compounded GLP-1 business line, our weight loss offerings was the fastest category to ever launch, just with our combinations of therapies focused on conditions around metabolic and insulin resistant dynamics. That business scaled to 100 million run rate in just 7 months. And so we believe there's a really durable weight business, even if you think kind of in a draconian scenario, of compounding GLP-1s not being there. And I think even more so when you look into the next year and two, there's an expanding assortment of therapies that I think are going to be very important to patients. And we're going to have to keep evolving that offering and category, just like we do in other categories, to make sure that we've got great treatments that patients are really looking for.
Then to hit the second part of your question, Maria, just around how we see acquisition trends evolving. And you see some of this in the marketing leverage that we were able to gain that was quite substantial in 2025. Really what we are seeing is that we are benefiting from the breadth of treatments that we're able to offer on the platform, as well as the investments we've made historically around really communicating to consumers the power of the platform. I think with that, we view that gives us a competitive edge on the acquisition front. And then what we do see, particularly as we enter newer specialties like labs, will enable us to provide more insights to consumers, as well as move towards a world that's more oriented around proactive care. Our view is that carries immense potential to further drive acquisition efficiency. What we observe on the LTV front is that as we are able to help our providers on the platform pair consumers with personalized treatments that really are unique and meet their needs, that effectively drives stronger retention across the platform, whether that's, as we talked about in the prepared remarks, addressing multiple conditions through more simple mechanisms, or helping users balance both efficacy with side effects, or providing alternative form factors. We see all of those things, as well as the ability to leverage more and more insights to help providers pair consumers with those treatments, driving stronger retention, which ultimately drives stronger lifetime value for the consumer.
That's very helpful. Thanks very much.
Your next question comes from the line of Justin Patterson with KeyBanc Capital Markets. Please go ahead.
Great. Thank you. Good afternoon. I wanted to talk a little bit more about some of the investments you're making. It sounds like between AI, labs, and wearables, you're creating the conditions for a flywheel down the road. So I'd love to hear a little bit more about just how deep you're looking to go into the wearables ecosystem, how long we should really think about the investments to support some of these initiatives, and how we should think about labs, the steps to scale up labs over the next year or so. Thank you.
Yeah, thanks, Justin. I think those three buckets are a real focus for the business. And I think when you step back, there's just never been an easier way to collect more advanced data from patients across these things, whether it's wearable devices, whether it's polygenic risk scores that you can do a swab on the inside of your mouth, whether it's cancer testing or it's full gene sequencing. It's just really incredible. And so as that accelerates, and our investments in your bio accelerate, and we're able to get testing at home for cheaper costs, we'll be verticalizing that infrastructure so that you, as a member of HIMS and HERS, can be getting access to this type of data collection on a really frequent basis. I think that intelligence layer to then help understand how we get ahead of what you are struggling with or what you may struggle with in the future is going to be an increasingly important part of the business. And so this is where I think the platform really transitions from focusing on a single treatment to proactive preventative care. I actually think that type of care is in and of itself a new category for HIMS and HERS. It's almost a longevity category, so to speak. But I think as people start to realize a platform like HIMS and HERS gives you access to what the 1% have and lets you take the necessary steps to get ahead of it, it's extremely empowering, right? And so we are going to go deep in all three of those areas. From the device side, either through our own or through partnership. We've obviously already acquired our own blood testing device, through our own AI efforts and teams, which we've already started to launch with the labs efforts. And it's starting to pay off, right? When you look at the prepared remarks, we shared that 70% of people who do a lab test on the HIMS and HERS platform identify an area of risk that is treatable on the HIMS and HERS platform, right? Most of the time, this is something patients are learning for the first time, that they're pre-diabetic, that they're at risk of cardiovascular disease, et cetera. And so there's a massive flywheel in making the entry point in data collection and learning about your health extremely low and extremely easy to get started, and then ultimately build value over the long term with these patients as we expand our care and can have a more comprehensive look at their health.
Yeah, I think what I'd add to that, Justin, is I think, similar to what we've done in the past, like we will be, thoughtful and continue to stage gate the investment. I think much of what we're investing in kind of follows the four pillars, that we've always spoken around, which is like the brand, the investment in technology and data that reinforces the personalization and unique products we're able to deliver, as well as just the strength of our provider network. And so I think that what you see now is a very vast balance sheet, as well as strong free cash flow that's enabling us to make the transition that Andrew mentioned towards a platform that is more oriented around leveraging data to treat consumers proactively. Ultimately, we think that these investments, as they start to come together in 2026, in outer years, have the ability to quickly have positive ROI and ultimately pay off for themselves and become self-funding. Whether that's in the form of higher lifetime value that we discussed around the last question, or even just with proactive care, being able to unlock new insights to consumers to drive better acquisition efficiency through lower cost channels. Those are all mechanisms that we'll monitor and continue to lean into. But ultimately, we believe have the ability to effectively make these investments pay for themselves very quickly.
Great. Thank you both.
Your next question comes from the line of Craig Hettenbach with Morgan Stanley. Please go ahead.
Yes, thank you. For some of the legacy core offerings, can you just talk about which categories you expect to kind of drive growth in 2026? And then within weight loss, is there a range that you're embedding into guidance for this year?
Yeah, thanks for the question, Craig. Like maybe I'll start. I think increasing like just the concept of, just want to caution the concept of core, versus like non-core is becoming increasingly less and less relevant. I think that how we're orienting the business is because the lines across specialties are blending more and more, is really around the concept of international and domestic. And then underneath that, what you do see is you have businesses of varying tenure. We see, a lot of potential in both the HIMS and HERS specialties, for continued growth. I think we were excited to see the HIMS brand grow 30% year-over-year in 2025. And we do believe that we're positioned for continued growth, whether that's in the form of newer specialties like testosterone that are rapidly emerging, or even as we start to see the benefit from the stronger retention on the daily health offerings, in both sexual health and greater assortment in other categories like hair. Each of these disciplines has the ability, within the HIMS specialty to continue to power growth. And then flipping to HERS, we're seeing, very much the same element. Historically, newer categories that we've launched have taken, 12 to 18 months to scale. I think that as we look at around things like labs, menopausal support, as well as some of the tenured categories like HERS care, we continue to see robust growth across many of those, and I think we'll continue to invest in those. But as we make the transition that Andrew mentioned, previously in both his prepared remarks and in the question, we're able to proactively serve consumers. I think that's going to be a pretty substantial unlock that will provide the ability to, for us to continue to see our tenured specialties grow.
Got it. And then just as a follow-up, when I think through the 2030 target and kind of the path to 20% margin, you commented a few times international is kind of break even and there's some investments there. So is there anything around kind of the U.S. business or efficiencies that are helping to potentially offset some of the drag on international just from a margin perspective?
Yeah, I don't think that the drag on international is going to necessarily be permanent per se. I think that what we will do, and I think it's almost going to be more on a market by market basis. We will look at the opportunity in front of us. I think across most international markets, the orientation will be a growth orientation. I don't know that the international universe necessarily will be static for us, as well as we continue to utilize our current assets as well as the Eucalyptus team to launch in new markets. Newer markets will tend to probably carry a more challenging margin profile. But then as we look to markets that season over the next 2 to 3 years where there's already a strong presence in, there's the opportunity to start to see some margin expansion as you get 2-3 years out. And you kind of, if you look at the history of the U.S. and as we made the transition from, a loss-making business on our domestic operations to profitability, the ramp in margin as we were able to realize economies of scale kind of, from 2022 to 2023 was fairly rapid. And so I think our expectation is on a market by market basis, there'll be a similar concept in the international markets. And then as we look to the domestic operations, we are investing, fairly aggressively in a number of newer tenured specialties. As those specialties hit their, milestones and stage gates, we'll continue to invest. But what you also do see is on a specialty by specialty basis, the spread between the tenured specialties and the newer specialties, the margin profiles start to converge. And so I think between that and the domestic operations, as well as on a market by market basis, international markets kind of in the latter half of this decade becoming more and more margin accretive. We view that as the path to hit our goals of $6 billion of revenue and $1.3 billion of adjusted EBITDA.
Got it. Thank you.
Your next question comes from the line of Eric Percher with Nephron Research. Please go ahead.
Thank you. Andrew, I'd like to ask your perspective on the composition of the international business as we look out a year, both across Zava and eucalyptus, in terms of the specialties or personalization. And then I know you had this line about becoming a leading provider of branded GLP-1 medications. Is that as simple as what we see running through Juniper today? And how do you think about maintaining relationships with the brand manufacturers?
Yeah, that's a great question, Eric. I think the composition overseas will likely mirror eventually as it matures the U.S., right? I think there's a lot of category expansion overseas, and each of these businesses that we are integrating in have different focuses in different markets, right? The Pilot brand in Australia, very focused on men. The Juniper brand focused on women and weight. Ultimately, we think that it will probably converge to have really nice diversity at scale. I think overseas, the relationships with our international teams and the branded pharmaceutical companies is quite strong because there's really consistency. They've got great rapport. They've been able to be a large consumer distributor to them. I would expect that to maintain and stay consistent. We don't expect to change that model. I think that's the winning model overseas, and would expect it to remain so.
Thank you. And just to follow up, was the comment on the majority of the business being non-weight loss, both for revenue and was it free cash flow or cash flow?
Yeah. The comment was just around the majority of our revenues are actually coming from outside of the GLP-1 business, today. And then you can just translate that from, the tenured specialties carrying a more robust margin profile from economies of scale. The adjusted EBITDA or the margin profile tends to be stronger on mature categories as well.
Thank you.
Your next question comes from the line of Mark Mahaney with Evercore. Please go ahead.
Thank you. I just want to ask two questions about both the fertility opportunity that you're seeing and labs to date. You've talked about them both in the past. Can you just give us a more of an update on the data points that you're seeing and how you think about those opportunities? Thank you.
Yeah, thanks, Mark. We've yet to launch anything on the fertility space. We have launched in the last couple of months the menopause, perimenopause, and low T, as well as labs. Those kind of happen side by side. So far, I would say just, nearly 10 years of testing out go-to-market strategies, I would say we are incredibly encouraged by the early data. I think we believe that each of those three have near-term opportunities to scale to 100 million run rate, just like many of our other winning categories. We also see that the actual engagement with the experience from a consumer standpoint is a very high-value engagement. On the hormonal side, men are seeing massive increases in their testosterone levels, feeling better. Retention indications are showing it's in line with some of our best-in-class categories. And on the lab side, also, it's just providing people data that frankly used to cost somewhere between $5,000 or $10,000. And so it's an immense amount of knowledge. And then from there, 70% of those people are identifying an area of concern and an area of clinical risk that the platform can actually help treat. And so I think both in hormones and labs, we're incredibly encouraged. We've got dedicated efforts on both of those. And I'm fully convinced that they will be big parts of the business going forward and for the coming years.
Thank you very much.
Your next question comes from the line of Brian Tanquilut with Jefferies. Please go ahead.
Hey, good afternoon, guys. Maybe just a quick question, Yemi. As I think about the range of guidance on EBITDA, pretty wide range there, where it could be down or up in the year. Just curious what the swing factors are that we should be considering that would drive the variability there. Thank you.
Yeah, I think it's a great question. I think a lot of it is, like we've historically done, in the past, we stage gate many of our investments where as they hit scale milestones or as they achieve unit economic profiles, we tend to lean in a bit more. As you look kind of at the end of 2025, we launched three specialties that we feel have the ability to be fairly transformative to the platform. And so I think what our guide provides is the ability and the flexibility to lean into continuing to scale those specialties if we see them achieve promising signs on the unit economic front. We spoke a little bit around how we're investing in tech and then some of the ROI that we expect to see there. Additionally, embedded in our guidance is the flexibility, to continue to proceed with many of those investments as they show signs of success. And then the final area of investment, that we spoke around really is in the international business, both in terms of as we do the integration of the assets with some of the companies that we've already closed upon, such as Livewell, as well as Zava, but also, with eucalyptus potentially coming in the second half. We wanted to leave ourselves a wide enough range to invest across all of those areas. And so if we see meaningful opportunities for growth in technology, meaningful growth opportunities in new specialties, or meaningful growth opportunities in international markets, we definitely want to take the growth orientation to take them, because we feel like, as we've demonstrated in the past and from past pattern recognition, the ability to expand margins with greater scale is something that our teams are quite good at.
Got it. Awesome. Thank you.
Your next question comes from the line of Glenn Santangelo with Barclays. Please go ahead.
Yeah, thanks for taking my question. Hey, I just want to follow up on the 4Q US revenue number being up 17%. I was kind of curious if we were to sort of parse out the compounded GLP-1 revenue, would the compounded GLP-1s a headwind or a tailwind to that number? And the reason I ask, right, is because, Andrew, you're sort of talking about, that it's becoming such a small part of the subscriber base, but yet, Yemi, you sort of talk about it as a $65 million headwind in 1Q. I'm just trying to reconcile all those data points and how we should think about, the contribution at this point, particularly within the fiscal 26 guidance. Thank you.
Yeah, well, I think maybe I'll start with that. I think what you do see, kind of in the transition from Q4, and then I think you'll really see this in Q1, is just we have a shift to where we are recognizing a lower revenue per order. That's not just a shift on new customers. I think it's a shift across the entire business that's progressively happened over the course of the last, call it 2 to 3 quarters. The ticket size for the GLP-1 business, is a bit larger, than our core business. So the revenue impact as well as the EBITDA impact, there that we see, is fairly meaningful. But I think that said, I think while GLP-1s have been a meaningful growth factor to the platform over the course of the last year, as we kind of stated in the prepared remarks, the vast majority of the revenue is made from the non-GLP-1 business. And as we continue to diversify, we expect that trend to continue. And Andrew, not sure if there's anything you wanted to add more broadly.
Nope, I think that's right. Thanks, Yemi. Okay, thanks.
Your next question comes from the line of Ryan MacDonald with Needham & Company. Please go ahead.
Hi, thanks for taking my questions. Andrew, obviously a lot of news flow sort of post the pill launch and then sort of pulling the pill from the market. Can you just give us an update in terms of sort of where sort of things stand from a regulatory perspective, if you've had any conversations with FDA or DOJ, or sort of what level of concern, I guess, there is around that? And then the second question I have is around clarification on your earlier response. I think it was to the first question. You talked about that obviously the pipeline is very strong for at least 12 or 24 treatments in the next couple of years here. As you think about supporting that broadening assortment, do you feel intend to do so via branded partnerships as those come to market, or sort of continuing sort of the historical practice within the business of focusing on personalized offerings instead? Thanks.
Yeah, Brian, it's a great question. On the pill side, as well as the others, there's probably not too much we can say. I think we believe that the pill was a continuation of the strategy to broaden greater personalized options for patients on the platform and spend many months working on that. I think we pulled it back to prioritize, honestly, just engagement and the relationships with the ecosystem stakeholders. We talked to quite a few of them on launch and understood their dynamics and chose to prioritize them in those conversations, and so decided to pull it. Regarding FDA and DOJ, I don't think we can share too much on anything ongoing, but continue to welcome their conversations and as we've talked about within the FDA in the past, feel very strongly that they play an important role in the safety of consumers, and so are happy to be working with them to figure out the areas of concern. On the pipeline side, when you look at the weight loss category in specific, I think there's an accelerating amount of treatments that are going to be coming to market that are on the branded side of the business. So, this is next gen biotech that are in phase 2 and phase 3. This is some of the larger players. And so I do think consumer sentiment and consumer demand is going to continuously change. You see that in the last few years from when these drugs first came to market, with the launch of Zepbound vials. You see traffic dynamics moving pretty materially when you look under the hood. I think that's just gonna be the evolution of this category, where you're gonna have more and more options. They're gonna be at different price points. They're gonna have different side effect profiles. They're gonna be known by different providers. And ultimately, I think for us, as we've said across all of our categories, we've seen breadth really matter. And so I do think we'll continue to evolve our platform, evolve our relationships and our approach to make sure that what we have on the platform is what people want. I don't think we are stuck in any single way. I think we have prioritized the consumer up until this point for what we think is best for them and what they are looking for and what they want. And as that changes, we'll continue to change with them.
That concludes the question and answer session. Ladies and gentlemen, this concludes the HIMS and HERS fourth quarter 2025 earnings call. Thank you all for joining. You may now disconnect.
Well, everybody. There is the earnings call. If you guys are still around, make sure before you go, you hit the subscribe button and join us again tomorrow for the Melly earnings. We have many earnings live streams this week. We got NVIDIA on Wednesday. You will not want to miss that. Got Rocket Lab Thursday. We have Zeta tomorrow. We got Snow, also a big software name, on Wednesday, along with NVIDIA. And so is Salesforce. So if you guys have any final questions, let me know down in the chat before I head out here. But yeah, just make sure you like the video and tune in for the rest of the week, because we're going to have tons of lives. As you can see here, HIMS on that call continue to drop. It's down 8% in the after hours session. Let's see what else is going on here. HIMS is down. Let's take a look at KTOS. KTOS. Let me hide some of these indicators. And the KTOS not moving a ton. BWXT hung in there, and FANG. I want to see if Sidekick. No, Sidekick doesn't have access to the earnings call yet. But you guys, the thing I'm going to do tomorrow is actually use Sidekick. Let me find an example I can use, maybe from like last week, that I can show you guys. If you guys can use TrendSpider's Sidekick AI to do it. For example, we can do like what reported earnings last week. PanW. Open up the daily chart here, and you can see they tanked. I'm going to say summarize since PanW earnings call for me. And so tomorrow, you guys, or maybe even later tonight, prompt into TrendSpider's Sidekick AI and get a quick analysis of what was said on that HIMS earnings call. So as you can see here, gave you the key numbers. I guess they don't have PanW. Let's try a different stock. Normally, it should have them by then. Let's take a look at a different one here. Let's do DoorDash. Maybe PanW just didn't have it for whatever reason. Hey guys, what are your guys' thoughts on what just happened with HIMS? I mean, from a chart perspective, I'm just looking at it here on the weekly, and it's trading at what? 1445 right now. I mean, it's obviously bleeding. I think if you like the fundamentals of the company, probably is going to be a decent long-term hold. It does seem to be obviously in a pretty crazy downtrend. I wouldn't be surprised to see it touch, 12 or somewhere around this area before it ends up reversing. But here you go. Here's how you can actually use Sidekick to summarize an earnings call. All I did was type summarize the most recent dash earnings call for me, and it pretty much just does it for you. It has access to the entire transcript of the earnings call, and it's going to have it for HIMS, should be by tomorrow. And so if you use TrendSpider Sidekick AI, you can easily do that. And by the way, TrendSpider is on sale, 40% off just for today. It ends tonight. So I'd absolutely go ahead and check that out. I'm not sure which gap is being referred to. Also, there's a weekly gap right there. People are talking about a gap in the chat. They have a gap here under 11. Draw a box right there. And then they also have a gap again right there. So a couple gaps on the HIMS chart right there. They're both pretty interesting to me. But other than that, you guys, I think we're going to head off. Make sure you subscribe and join in for the rest of the week for the rest of these earnings calls. And also hit the like button. But I'll see you guys tomorrow, all right, for Melly earnings. Be sure to tune in.